Welcome to the Contractor Success Forum. Today we have with us Martin Holland of Anneal Business Coaching. He also wrote the book, The Profit Problem, and he has an amazing podcast just like ours called The Cash Flow Contractor. So go check that out too, because I was on there. Go look for that one. So it was great. And he also had Mike McAllowitz with Profit First on there. Martin is taking the confusion out of the financial statement so you can make better decisions. I got engrossed with his book that he had sent me. So it was great. And I used it for doing my own accounting. And it was a great quick summary for a non-accountant, maybe even for an accountant, but it was great. So check out our show notes where we'll put all the contact information where you can go find Martin and you can find all the information about these other three wonderful guys also on here. We have Stephen Brown, our long-term industry professional. He's a construction bond agent with McDaniel Whitley Bonding and Insurance Agency with over 30 years of experience underwriting and placing bonds for you as contractors. And Wade Carpenter with Carpenter and Company CPAs, helping contractors nationwide become permanently profitable for over 30 years. And me, I'm Rob Williams, your profit strategist with Iron Gate Entrepreneurial Support Systems, driving profit in your businesses with decades of vertical integration as a contractor, manufacturer, aviator, financial strategist in the construction industry. Welcome, Martin. Man, after we got all that out. All right. How you guys doing today?
I'm doing well.
Great. Well, Martin, we were talking about taking the confusion out of financial statements and we were also talking about bidding and different things. Where do you guys want to start today? Do any of you guys have any questions for Martin also?
Well, I know you preach having great financial statements. I'd love for you to chat a little bit about, a lot of coaches don't focus on that, and I really appreciate that message because that's where it starts. And I know Stephen can't get bonds for people that don't, have great financials. So,
Well, yeah, first of all,
what do you
thanks
think,
for
Mark?
having me on here. I love this stuff. This could be a 4-hour podcast because we were talking ahead of time and we're like-minded folks. And we don't have to put our people through 4 hours of this, our listeners. But financial statements, I say and said earlier that there are 30.2 million businesses in the United States, and just about 30.2 million of them do not have financials sufficient to make business decisions. And I've had over 400 paying clients. So how many more times that have I talked to? And I mean, maybe 3, maybe 5. I've even got clients 200 million, 80 million sales don't have good books. They have good books sufficient to pay taxes because they have to do that, but not good books sufficient to make business decisions. And that's really one of my great passions. I don't think it's necessary that business owners know how books are kept or how the reports are created, but they do need to recognize good books so that they can insist on them and get the information they need to use to make decisions. And that's really my passion in life. And most people, most business owners I know, when we talk to them about books, their eyes roll back in their head. It's a necessary evil. They don't understand it. It costs money. It's associated with taxes. When they learn how to use them to make decisions, it gives them clarity. I often say it's like, if you don't have books, it's like the last 4 minutes of an NBA finals game and somebody puts a blanket over the scoreboard. You don't know what you're supposed to do. You know, if you're supposed to shoot 3 free throws or take 3 desperation threes or stall or what. When you have books, you have the information you need to make decisions. So getting books and teaching people how to use them is one of my favorite pastimes.
That's so interesting. We talk a lot about profit first on here, and it was the first time I met you and talked to you, and you were interviewing Mike McAllowitz of Profit First, and it was interesting. Part of our conversation is, well, Profit First is great, but I believe people should have books. And there's a misconception that Profit First means you don't have to have books. And there are some people that do construe it that way. And I guess since you do have a cash flow system, it seems like you don't need books. So people do sometimes run, getting their books behind. So how did you find out about Profit First?
Was thinking about that. I don't really know. I don't remember where I first
Yeah.
came across it, but I read. I'm an avid reader, and if anybody mentions a book, I buy it, and it sits on my stack, and I get to it. And so, I mean, it's been some number of years I've known about it. The basic principle, I have all of my clients create what I would call a savings account. Might call it a profit account, whatever label you want to put on it, separate from their earnings. So we would always do that kind of thing. But your point about Profit First is a cash. I love the way Mike Michalowicz describes it. It's a behaviorally based method of keeping books, right? So I get that. You're going to look at your bank account. If there's an abundance there, you're likely to spend. So you distribute it, you see what you've got in the various categories. That doesn't really answer all the questions, or at least I haven't seen it answer all the questions for many of my companies where they have assets such as inventory and accounts receivables that are significant. There's a whole lot going on that doesn't hit the bank account directly, concurrently. And to make decisions, you can't just look at your bank account.
Mhm.
I love the enforced discipline and taking the profit first. I love that. But you need more information than that, not just to pay taxes, but to do business. And I'll just give you an example. One of the critically important questions every business owner should know, absolutely, is what's my break-even sales? And I have never, ever had a business tell me what their break-even sales were. They'll tell you, well, my overhead's 9 million or $1 million this month, so I guess it's $1 million. No, it's not $1 million. You can't understand what your break-even is unless you understand the difference between fixed and variable costs, and unless you understand what your margins are. And literally, I'm shocked. I was in business myself for 42 years, or 40 years, 41 years, and I thought everybody would know this stuff. And basically the answer is I haven't met anybody who knows it. And it's not because I'm smart. It's that it hasn't occurred to them. That is a fundamental, any listener right now needs to ask themselves, how much do I have to sell every month to break even on my expenses? Then, how much do I have to sell every month to break even on my expenses, plus my debt service, which I have to pay every month, which comes out of profit. And then to make an available profit above that. Oh, well, look at several things you got to figure out. What are my expenses? What's my fixed expenses? What's my debt service? Most people can't tell me their debt service without going, well, I'll get back to you on it. Okay, well, you don't know. $20,000 a month, $100,000 a month in fixed payments on your long-term debt. They don't know that. Well, you ought to know that. Then what's a reasonable target? Why are you in this business? So anyway, that's a fundamental question. There are many others, but that's basic number one from an operating standpoint, not necessarily balance sheet management, but from an operating standpoint, that's the thing. You need to know what your margins are and what your break even is for those different targets. And I've never met anybody in my conversations who knew that. And profit first methods and cash management really don't deal with that. I mean, maybe it makes you think about it so that you go deal with it, but the amount, and if Mike Michalowicz were on here, or maybe Rob, you'll correct me if I'm wrong, but it just doesn't deal with that. And so it supplements, the two
book
things go
doesn't,
together.
but the advanced Profit First does. Yeah.
Okay. Yeah, okay.
Implementing it in construction actually does if you put in the materials and
Yeah,
stuff.
Wade's seminar, it's interesting. The one that he and I give the contractors, and we
We were
talk
just
about.
teaching break
Yeah,
even.
we were just
on
even.
that
It's
very-
break even. You take your expenses, your debt service, and your owner's profit, and then what's your break even? So
Right.
so how do you do that? And I love that about Profit First is adding that $100,000 a year to it, or whatever your, maybe it's
Right.
$1 million a year, whatever your profit you need, and then that is your break even. And Wade's even got a really neat drill where he figures out the margin in there too. So it's a great little seminar that you can put in there. But that's
well,
Profit First.
we're aligned. I mean, we think.
Yeah. Oh yeah. I know we are. Yeah. That's why we had you on here, man.
I mean,
So
we were
it's
teaching
great.
it in the concept of like, exactly what you're saying. What do you need to break even? But, you know, if you try to chase that top line by giving away your margin, that break even number jumps on up. Martin, I know you just told a story. I didn't know if you wanted to go into that about
Sure.
your contractor with.
Well, I have a contractor who came to me about 2.5 years ago in a lot of trouble. And principally, it was from lack of understanding margins. If he wanted the business and if somebody was doing it and a builder or contractor that he works for said, well, so and so's at this price, and he would match that price. Right. So he was in a lot of trouble. Well, we got him to understand margins, and he has good books. And so our target is 40. Our real margin is 35%. So that's his gross profit margin on what he does. But he called me yesterday. And this is after 2 years of working together, more than 2 years. And he said, Martin, he said, I got an opportunity. This guy came to me with 80 units of what he does, which is a lot. And he said, man, 80 units. The only problem is he wanted me to come down to a price that would have yielded my client an 18% margin. He said, wow, it's 80 units. And I said, yeah, it's 80. You know, it's that joke about get a bigger truck. You're losing money, you need a bigger truck. He said, I'm just so tempted to take this. And I said, well, you can't do that. He has all the work he can do right now. So this would have taken a month and maybe 2 months of his capacity and filled it up with cheap work, which if he got super efficient, you can't double your efficiency in a factory in a week. But if he did that, maybe it could work. But that's not going to happen. So it takes a month or 2 months of his capacity and runs it at 18%. Meanwhile, he turns down or pushes out to the distance his jobs that pay 35%. And he said, well, I knew that's what you're going to say. But man, he said, 80 units. I said, remember, the purpose of business is not sales, right? It's to make a profit and then to turn that profit into cash. And if something that you're wanting to do, you can have this pipe dream that if I get that big sale, I'll find some way to reduce costs or something. I said, well, what do you mean? That's not what happens. You get the job, and then what really happens, sometimes it does, but what usually happens is you break some of the material, or your guys don't show up, or you figured 3 hours per this and it takes 4. I said, that's what usually happens, because you bit it with a sharp pencil trying to make it real trim. And then the reality of it is that's not what happens. So your 18% margin is really going to be a 10% margin. And you're going to actually wind up losing money. So just don't do it. And he didn't. But after 2 years of hearing this every week, he still had to call and ask because the temptation was so. He goes, oh, man, 80 units. I go, I know. I had a builder one time, and he had an inventory of 60 homes, which I know you guys relate to. And he was bemoaning because I'm always trying to get the margins up. Builders, it's a little different because, as you know, the market is kind of set, a little bit set. But he said, man, I tell you, sales, everything, got to sell. I said, I will sell every one of those 60 houses in 60 days, and I'll guarantee it. He goes, oh, my God. I said, you aren't going to like the price. And of course, I can sell everything. Right. I'll just cut it in half, take my 10% sales commission. Well, no. I got to make, okay, now we're back to you got to make money. It is not about sales. It's about sales that give you a realistic opportunity to make a profit, and that profit with a high likelihood will get converted to cash.
Yeah, that's a big problem right now, getting an appraisal. When the prices are going up, you're
right.
A lot of times stuck with the appraisal. Not all the time.
I like to ask Martin a question, if you don't mind. We were talking about intentional bidding and how that ties into the whole thought process. Intentional bidding, well, every time I throw out a bid, my intent is to try to get it, or my intent is to try to hit a home run. And maybe everybody's asleep and I'm the only bidder, and then I'll still have to go back and negotiate because I'm 2 times the engineer's estimate. But that's going to happen. It costs money to bid jobs. What does intentional bidding mean? Because you were telling me about giving a talk about it.
Yeah, I'm giving a talk next Wednesday to a group, Subcontractors Association. All methods of bidding. That's one of the things when I work with what I'll call industrial type clients is I want to see your bid process. And I wish I had it laid out, but basically intentional bidding is, your capacity. Okay. I can do $1 million worth of work a month. I can do $25 million worth of work a month. whatever. And if you're a general contractor, you're thinking, well, it's unlimited because I can hire more subs. Well, no, you can't, because you still have to bond it, right? You still have to pay, you've got financial, but what's my capacity to do work? It starts there. And then you say, what's my break even? Okay. So what margins must I have to break even? And then debt service and profit. And that gives you a minimum margin that you have to bid. Now, there are some other things in there. I like to really know what my margins are, real cost. People say, well, I use $1,000 a day for labor. I said, well, how much does your labor really cost? Well, $650. Well, plus your payroll tax and your, okay, yes, $700. Well, then use 700. Don't use 1,000, because that's how you bid yourself out of if you're not using real numbers and you apply a higher than what you think margin to it, you're grossing up what you already grossed up. So knowing your real costs, knowing your capacity, know what you have to have. And it's a pipe dream if you figure that out and you bid for less than that. You just stand there and say, you cannot do that. And what I hear oftentimes is, well, if I get the bid, I'll figure out how to keep some of that money. Or I got to keep the guys busy, right? Until a good bid comes along. Well, no, you have to know what you have to have. And then the last thing in this talk, I have 4 steps in this thing, but the last thing in this talk is confidence. You have to go bid what you have to go bid. You can't bid 25% margins if you got to have 30% and hope you're going to get it. You have to go bid what you're going to bid. And if it's impossible to do that, then there's 2 things. 1, you're grossly inefficient and you need to fix that. Or 2, you need to get the heck out of that business, go do something else, because it's a guaranteed way to lose money. And I have another client, it's a longtime client, and we knock heads. He does construction type work, but he also does service work in his industry. He makes a lot of money on the service work. He sells a lot in the industrial work. Well, I'm always telling him, you got to get your margins up. And he's always telling me, add value other than just price and things like that. He literally told me this the other day. He says, general contractors don't give a damn if you send them a Christmas card. They just want the lowest price. And I said, well, how's that working for you? Because he lost $300,000 last year. I'm 19. He lost $300,000, and on January 1st, he had $750,000 worth of accounts receivable. I said, how's it working for you? What the hell are you, what he's doing? Sorry, I'm getting a little strident here. But what he's doing is he likes taking his company that was $3 million a couple of years ago, and it's now $8 million, and that's really cool. I get to talk about that. I said, well, I really don't care. I'd rather have a guy that made $500,000 on $1 million worth of sales than a guy that had $100 million worth of sales and lost $25 million. And he'll agree to that, but that's not what he does, right? His intent is to get the sale, and he won't admit it, but it's for bragging rights. And I just said, we're at cross purposes. We butt heads a lot because I don't bend and he's not bending, but a little bit more of $300,000 loss and $750,000 of receivables. He's starting to feel the pain.
Well, you triple your sales, you make those kind of crazy numbers that you can brag about. Who are you paying?
Right.
I mean, who are you paying? You're not paying yourself. You're not making a profit. So who are you in business to pay? The banks? Banks love it when your account balances go up. When you might need to borrow more money, you're making them. I guess that's my point. Is who are you feeding when your sales get up like that?
The other aspect is we think if we get bigger, say if we can get to 15 million, well, let's get there. And then even though we're not profitable this year, then once we get there, then let's figure out how to be a profitable $15 million company. Well, one of the problems with that Profit First pointed out is you may have the wrong kind of sales. You may have grown that to something that won't be there. Get it figured out first when you're small. And with the correct kind of sales, the wrong kind of business, you may be in the wrong business at 15 million that you just went from 3 million to 15 million in the wrong business, in the wrong market. Get the right target market when you're small, then you can grow that business. And I did that myself in the wrong business and said, well, we're just not efficient at it. We'll do all our lean manufacturing and get the volume there, and then we'll buy the right saw, and then we'll do these other things, and we'll get the right equipment to be profitable next year. But we got the sales now at 15 million, whether we're losing a million or two, or, that's okay, because next year we're going to make 4 and we're going to be at that volume. And it just doesn't work that way a lot of times.
It's like the tail wagging the dog.
I just say it over and over. Sales is not the purpose of business. And if there's salesmen in the room, they always get mad at you because they're the rainmakers and all that kind of stuff. I go, no, you're not the rainmaker. I have a guy who does sales training for a large organization that you would know. And I've gone to some of his things, and he always draws on the whiteboard a little train. This is business. Sales is driving the train. It all starts with sales. Sales, we're the rainmakers. And I just put my head down. I said, well, before you have a sale, you have to have something to sell, right? And before you have something to sell, you have to have some financing so that you can buy the parts and components or whatever it is it takes to sell that. By the way, you need to have bookkeeping and accounting and HR and IT and tax, or, all the legal stuff. You got to have all that, or you got nothing to sell. So it's a chain. That's such a beat up metaphor, but it's a chain. And any of the links is weak, you're going to go down, right? Sales is not it. I have a client, when you were talking, Rob, it just made me think of it. It's been one of my first clients 8-9 years ago, but we started looking at what he did and started doing marginal analysis. This sells for this, and our cost against that, our variable costs are this, and here's what's left over. And then we did other categories. He had a really poor performing sector of his business, which accounted for 34% of his sales. And I convinced him to quit doing that. And he stopped doing it. And of course, the low margin, high volume stuff, that's what you sell the most of, right? Why can't? They're 34% of my sales, just this one category. His profit, I wrote an article on it, why I have the numbers in my head. His profits went up 808%. So he reduced his sales by 34%, and his net profit, all the way down the bottom line, went up 808%. Now, if you're not making very much money, it's pretty easy to go up 800%, but that's where you got to start, right?
That's fascinating. We're starting to get down to the end. We're over our time, as I always do, always let us go over. But I love one of the points about profit first. And that was one of the things, even talking to you, Martin, where you're not a profit first professional at this point yet. We're working on you. But the part about profit first is not just the book. I thought that was a great thing that just came up in this meeting. And that profit first is the scaffolding that gives you the infrastructure to make a lot of your business decisions. It's the scaffolding that goes up and down, as well as your financing. It's the scaffolding around that for the business owner, because he's not a controller usually. So it's that scaffolding that enables you to do a lot of the advanced profit things, like what we're talking about now. This is all part of it. The sales analysis is one of the biggest parts of profit first, but it's not really in the book. And then there's the break-even analysis, and then there are so many different the cash flow factors that generate that. But it's all about getting cash flow. And I forget to say that on our program sometimes. I forget. Our definition of profit is cash. It's not the books. Profit first definition, and like Martin, and I know all 4 of us are really like-minded on that. It's getting that cash flow so you can pay yourself as profit. Right. And there's so many different things that we can do in there.
So very few business owners actually get to see the fruits of their labor. I mean, at least not in proportion. It's tied up somewhere. It's gone somewhere. They spend it stupidly. I had a client one time between Christmas and New Year's, bought a $140,000 sign. And I was livid when I came back. So what? Well, I saved $40,000 on taxes. I go, yeah, but you just sucked 140 grand out of your available cash that's financing inventory, which was huge for his business. Anyway, stuff like that.
That's I love that story. A sign, because I just knew you were going to say pickup truck.
No, well,
you actually said sign.
Yeah,
that's
I
a new one.
In Oklahoma between Christmas and New Year's. But yeah, and a lot of trucks. But that was one that just stuck in my craw. I was so mad. He never even mentioned it. It's his business. He can do what he wants. but as a coach, I'm supposed to be a confidant. And I found out after the fact, well, it's too late now. Golly, you know.
Well, it's so interesting. I know sometimes when we're talking to the contractors and stuff that might become a client, they're like, we're going to start in 3 weeks. And I know what they're doing is because they got some money they want to spend before we start,
Right.
So they're doing it, trying to get it outside so they won't have the accountability. It's like, okay, I
Right.
wonder, does he need a swimming pool? Is it a truck? What is he going to do before he starts becoming accountable? So it's a lot of fun. Anyway, this has been a lot of fun today. So today we have Martin Holland, Anneal Business Coaching. I always love talking to you, Martin. It's great having
Thanks,
you
it
on
is.
here. So hopefully we can get back together again soon. And
Absolutely.
we have Wade Carpenter with Carpenter and Company CPAs. Contact him. And we have Stephen Brown with McDaniel Whitley Bonding Insurance Agency. Look in the show notes. Share the show with your friends, because every time you don't share this with somebody, you're depriving them of this great information. So everybody,
Great point.
yeah, that's right, Stephen. and go listen to Martin's Cash Flow Contractors. Listen to his
Right. Flow is
podcast
one
as
word
well.
in that.
So it is, yes, cash flow is a big debate too.
In the
So
name,
the next
it's one
show we'll
word.
talk about whether cash flow is one word or two words.
Well, I just mean in the title of the name of our podcast, it's one
In
word.
your title, exactly.
Yeah.
Well,
I know,
anyway,
but that
have
is a
great-
deeper meaning that you uncovered.
Yeah. Well, we may have to put that in the show notes too. So anyway,
There you go.
if this part doesn't get cut out, I hope you enjoyed it. So
Yeah.
So anyway, have a great day, and we look forward to talking to you again soon, Martin. Thanks.
Okay. Thank you.